Good afternoon and welcome, everyone. Welcome to, I think, a really important topic and something that all of us need to be looking at the moment for a couple of reasons. One is it's a new year, and I encourage all business owners at the beginning of the new year to look at their prices. Look at the prices they're charging for products and services, and to try and identify, are they charging enough for their products or services? Are they not charging enough? These are some of the questions that you need to answer as a business owner. And then we've had that other change or difference over the last few months is that we've had inflation. And so now, even if we haven't been increasing our prices for a few years, it's now really, really important that we look at it and make a decision. For some of us, maybe we'll be able to maintain our prices as are, but most of us, I think, are going to have to increase our prices because our cost of sales have gone up, our overheads in our business have often gone up, and this is why it's important. And it's really interesting that over the last week, I've had a discussion with two business owners. One, the discussion was about the fear of increasing her prices. She was really concerned that if she increased her prices, she'd lose customers. So there was her one fear. And then yesterday, I had a discussion with a business owner, and he was obsessive about maintaining his profit margins, ensuring that the business is getting those profit margins that they expect. And I think it's really, really important that you understand both ways of thinking. And I'm going to share some tips with you today. I've noticed that some of you have asked questions already. How do you price if you're doing acrylic paintings? And somebody else said, how do you price if you cater in a small business? I'm going to try and answer as many of those questions as possible today to come up with a solution for you. For those of you that haven't met me before, my name is Andrew Patricio, and I've always been a business owner. But for the last 25 or so years, I've been educating, training small business owners in 23 different countries. So I've worked in quite a few different countries and have been really inspired by some successes of small business owners in different parts of the world. But one of the things that I notice, when you read business books, most of them don't focus on pricing. It's not something that they'll maybe mention it in marketing. If any of you ever did marketing at university or college, they speak about the 4 Ps of marketing. And in there, they may discuss pricing, but not specifics, of how do you calculate what is a fair price for your service or for your product. So I'm going to try and help you with that today. And just remember, if you've got any questions, just post them in the chat or the Q&A section, and I will see them, and then I'll address them as I go along. Some of the questions I may leave for a while because I'm going to answer them at the appropriate time, and others I'll answer as soon as you post them. So here's a couple of really important things that sound very, very simplistic. When you say to a business owner, you need to know the cost of every single product and every single service you sell. It's really interesting that most of them, a lot of them, I mean, not say most of them, a lot of them have no idea. And I was having a discussion with this business owner last week, and she was saying, I've been too busy and I haven't had time. And I said to her, you've got to do it immediately, absolutely immediately. I said, this is something you can't delay. Because she was saying, all our ingredients, the prices have all gone up and adjusted. And so for her it was even more obvious, that the prices have changed, they've adjusted. It's really important that she re-looks at the cost, at her costings. And at one stage, I used to have a bakery business, or in a retail store, I had a bakery. And what I used to do is I used to put all the recipes on a spreadsheet. So I put all the recipes on the spreadsheet, and then I'd have the ingredients on the same spreadsheet. And every single time the ingredients changed, it would automatically calculate my cost price. And then I'd have an idea of whether I needed to increase my prices or not. Obviously, sometimes in business, if the increases are very, very small, well, then maybe you won't change your prices. But I think the last 6 months and the last year, there's been massive changes in different things that we need to address. I think it's also an opportunity. When you haven't increased prices for years, there's an opportunity for you to now increase your prices. And also understand that your customers understand. They really do. They understand. They also dealing with inflation. They're also dealing with price increases. So they'll understand if you have to increase the cost of your product or service. So the first thing is to know exactly what the costs are. And if you need to create a spreadsheet and put in all your recipes onto that, that's exactly what you need to do. And when I say recipes, it doesn't have to just be, recipes for food. Let's say you're making furniture, or if you're a painter, or if you making meals, whatever it is, the idea here is to be very, very clear on how much things cost you. And I think that's really the key, is how much do things cost you? The next thing you need to take into consideration is your sales volumes, because this will have a direct impact on the prices you charge. Because in every single service or product that we sell, there's a fixed cost portion and there's a variable cost portion, okay? The fixed cost portion reduces as your production goes up. So let's use an example. Let's say my monthly expenses to run my business are $1,000. If I'm producing 1,000 widgets, it's $1 per widget. If I'm producing 2,000 widgets, it's 50 cents per unit. So it could be quite a large variation. So understanding what your expectations are, I think, is a good idea. So that's the first thing. The second thing that concerns me when it comes to that is that often business owners are optimistic people. So just be very, very careful of being too optimistic or too, thinking that you're going to do massive volumes. And those of you that have been business owners for a while, you know exactly what I'm talking about. We set ourselves a target. It's far too high. We don't achieve our sales. So I want you to be conservative when it comes to your pricing. The next thing is really important, and I'm going to mention this a few times on this webinar, is the importance of being very, very clear on exactly what your competitors' prices are. Because you learn a whole lot of things from your competitors' prices. And if you haven't done this in a long time, I encourage you to do it now, because especially when it's different businesses. For example, my son Marco is a copywriter, so he needs to know what the market price is for copywriters, so that he doesn't undercharge for his services. So even if he realizes, for example, maybe his overheads are lower or his rent is cheaper, whatever it is, even if he can charge far less than his competitors, I don't think it's a good business decision to do that if you can charge more. So you need to understand what the market is doing. You need to understand how much your competitors are charging. The next thing is really important, is your competitive advantage. And this is one of the reasons you can justify charging more. Think of things like, in my industry, for example, is, I just mentioned to you that I have over 25 years experience. So because I've been doing this for over 25 years, I can potentially charge much more than somebody that's been in the business for 2 years, 3 years, or 5 years. Why? Based on my experience. Okay, so that's one of my competitive advantages. So those are the type of things you want to be thinking about. What's important, your branding, your marketing, all of those things can influence your price. and I encourage you to think about this on a daily basis, is when you pay more for a product or when you pay more for a service, I want you to think about, why do you pay more for that product? Why do you pay more for the service? And often we'll justify it. I've heard people saying, it is a little bit expensive, but it's worth it. Whenever you say that or think that, I want you to think about why. And usually it's because of the branding, usually because you value it, usually because you need it, usually because you can justify it, and you've got to think about those things. The other thing you need to think about is your business location. Where your business is based can have a major impact on the prices you charge. If you're in a more affluent area, you're almost expected to charge more for a product service. Whereas if you're in a little bit, not so affluent area, I don't know what the appropriate word is, if you're in not such an affluent area, then you probably want to, charge less and compete against competitors in your industry. So that's what you want to be thinking about. And for those of you sharing your business, thank you for that, because it really helps me think through some examples that I'll share with you as we go through it. The next thing is how price sensitive your customers are. There are certain industries, for example, that we look for the lowest cost, depending on what it is. If you're very brand conscious, maybe you won't think about it. But I'll give you a very good example. One of the things that you've seen, or most of us, if you're going to your grocery store, is you may have noticed that the price of groceries has gone up a lot. And one of the things I know, because I was in retail for many years, is often the store brands are often, depending on the store, obviously, are just as good as the top brand, but often at a much bigger discount. So those are some of the things that influence people's prices. So what you may do, for example, in your business, is have a premium brand and then a cheaper brand. That's something you may do. And you've got to think about this as a business owner. Is this the right strategy to go? But one of the things you want to be careful of, and I know it's very, very difficult, is you've got to be careful of discounting all the time, or assuming that if you charge less for a product or service, you're going to make more money. So that's the first thing. Second thing you've got to be careful of, and this happens often in business, is that in the early stages of a business, charging less works. Charging less works, brings people into your store, or if you're selling a service, people are asking for your service. The problem is, as your business grows and scales, what happens is your fixed expenses go up, and then your business may not become sustainable. And this is what I think has happened a lot. I've noticed, for example, obviously we had COVID, and then we opened up, or we're opening up, or we're not totally open. I travel quite a lot, and I get the feeling that most things are open now. But what happened, I think, which is something that has affected a lot of small business on main streets, is that a lot of these businesses were operating in an economy that was really, really flying. And I want you to understand that in a very good economy, I would say anybody can survive. Doesn't matter what your business is, doesn't matter your skills, whether you're good or bad, you will survive and potentially make a profit, or at least cash flow in your business. As soon as the market slows down, which is what the Fed has been trying to do over the last couple of years or 18 months, is as soon as the market slows down, then people become more price conscious. So now is that stage. Your customers are maybe asking for discounts. As if you're selling to large companies, they're extending the terms. All of these things are taking place, and these things usually take place when the economy is struggling a bit. Okay, so understand that all of these things influence the prices you charge, and you need to take them into consideration. The other thing that's really, really important, and I mean, we've got a few businesses on here, for example, a catering company, for example, if you do artwork, if you make furniture, any of those businesses, or if you do digital marketing, any of those businesses, you've got to understand your time is very, very valuable, and you've got to cost it. So for example, if I was an artist, and I'm not an artist, but let's say I was an artist, one of the things that I have got to focus on is creating good art, but also doing it very productively. Otherwise, if I spend hours and hours on a work of art that won't make me more money, that is a problem. And actually, I had a very good example of somebody that used to rent space in my offices years ago, maybe 5, maybe longer, even 10 years ago. And the one thing I realized about her, which was very, very good, she learned very, very early on as an artist, is that the more productive she was, the more money she'd make. And the reason was that actually the paints when you're painting are minimal. Think of it, the cost of the materials when we're painting is minimal. What's expensive is our time. You could only do so many pieces of art in a day or a week or whatever it is. I've got no concept of art, but understand that as a business owner. So your time is a valuable commodity. And you need to charge for it. There's a lot of things in small business that you can't charge for. For example, I travel a lot, I read a lot, I do a lot of research. All of those things are what I use when I run my seminars, when I run my webinars, when I do workshops. All of that knowledge I use when I'm running these workshops. But I can't be invoicing clients for this. So how do I apply that to the price? By charging a fair hourly rate that covers all those things. So you've got to understand you want to be covering all your costs. Another thing that I often say to business owners is, one thing you've got to be very careful of is that if you start off at a low price, let's use an example, you launch a new product in your business, you decide you're going to make, I don't know, donuts now with sprinkles or whatever it is, or you're going to offer a new service in your business. If you started at a low price, let's say, for example, $2, and then you decide you want to increase it to $3, that is a big, big problem, because your customers are thinking of you that you're gouging them. But if you price something at $3 and then give them that discount, then they'll understand that the price is $3, but you're running a discount. So that's something you may do. I mean, 25% is a big number, but let's say you're launching a new service. You'd say to people, until the end of this month, you can get 25% off on the service because we're launching this new service, okay? But the customer knows they're getting a deal. The customer knows there's a deadline, and they're very clear on that. So they almost expect the price to go up. Obviously, you're going to get customers that are only going to buy when things are on discount. We used to call them cherry pickers when I was a retailer. You're going to get those type of people. But if they really want your service and they really like what you're selling, they will keep buying from you. So that's the way you've got to be thinking as a business owner. Let me rather start at a premium and offer a discount than start at a low price and offer increase the price. The other thing I always find fascinating, I really like retail, and I've realized that I'm quite unique in that way. I'll like going into supermarkets, into retail stores and things like that, and see how they merchandise things, see how they do promotions, all those type of things. And I've always tried to understand the psychology of pricing. And so I was doing some research for these slides, and I thought, let me just go and see if there's a psychology of pricing. And I found this really interesting website. Hopefully the link is still valid, but this guy speaks about, the impacts of little detail. For example, when you quote somebody for a job, instead of rounding off the number, try and be precise. Or, for example, and you've seen this, all of these examples you've seen somewhere, maybe break down the price and say, well, it'll only cost you 95 cents a day. You've seen insurers sell things like that. And so you need to try and understand and always do a test. I know, for example, what we used to do years ago is, when I was a retailer, is you do stacks of products. So let's say, for example, you do toilet rolls, 4 for $2, and you make another pile of toilet rolls, 50 cents each. You always sold more when you did 4 for $2. And actually, I had a recent example. I just remembered it now. I was at a market during the summer, a couple of years ago, when I was driving to a workshop, and I walked into this market, and there was these 2 young people on boxes shouting, strawberries 3 for $10, strawberries 3 for $10. And I was just amazed that most of the people that were buying the strawberries 3 for $10 were seniors standing in the lineup waiting to buy three punnets of strawberries. But I knew I assumed that they're not even going to eat all those strawberries. So why did they buy 3 for $10? Because that's the price that was promoted. And the perception was, and often the perception is when you do selling multiples, is that is cheaper. So understand that. So somebody's asking me, what's the psychology between 47 and 49? I don't know the answer to that question. Go and do some reading, and I'm sure you will learn a little bit about it. So go and check the link out, and you will learn about it. In most stores across North America will use 9s at the end. Often, if they use a 7, I know Costco uses this actually, they use that so the staff know that this product is discontinued. So actually, if you want to learn a little bit about that, just go online and just Google, how Costco price their products. And I think, I can't remember exactly the psychology behind or the way they do it. I think 7s means something in the retail store. So Dave says, I'm a professional photographer. That I have a photograph that I took in 2011. Finally, I was told by so many people, excluding family, now is the time to get off my hard drive and onto the entire world. And what would you charge for Peggy's? That would change Peggy's Cove and Nova Scotia. And this was also said by Global News. I've been trying so hard to get a website going and all these social. You got quite a long question. Yeah, I'll have to leave it till the end to read. But again, so let's go back to your question about pricing. It's really difficult to price things, but like photography. But one of the things that I would do is go and see what other photographers are charging. So that's one thing I do. And the other thing is understand that as soon as you make something scarce, it increases the value. And the reason I know this is I have a nephew that works for a very successful photographer by the name of Peter Lick, and they do exactly that. They limit the quantities of photographs that they will print, and that increases the value. Okay, so understand. But the truth is that the really only way to value something is by determining what will the customer be prepared to pay for it, which is, again, it's not an exact science. I wish it was an exact science and I could say to you, you know what, this is exactly the way you do it. So you've got to understand that, that part of the whole thing. But I mean, if a lot of people are saying that your photography or your photographs are absolutely brilliant, well then, you know what? I would look at what great photographs like yours are sold for in similar markets, in similar galleries and things like that, and then test the market. That's the only way you can do it, is you test the market, you try it out, and that'll influence your decision. So I wish I could say there's an exact science, but the reality is that I don't, and I know for sure that it's not an exact science. So understand that, that sometimes you'll charge more and sell more. Other times you'll charge less and sell less. which makes it very, very challenging. So again, all things influence. Is it the scarcity of the product influence it? How famous the person in the case of art and photography is? All of those things would influence the price you charge. Again, not an exact science. I wish it was. So let us just think of some of the things every one of us got to think about. And I'm going to take a couple of examples as we go through it, and I'm going to work through them. The first one is, it doesn't matter what your business is. The key, I think, with any business is being very, very clear on exactly what your fixed expenses are. Because I cannot tell you whether your prices are correct, too high, too low, if I don't know what your expenses are. And this is why it's really, really important that every one of you re-look at your expenses. I think that's the key. Every single one of you got to re-look at your expenses, because some of you, your expenses have gone up. For example, your rent maybe have gone up. Maybe your utilities have gone up. Maybe your telephone and internet. You want to write all of these things down. Obviously, if you've been in business for a while, you know this information. Your accountant produces financial statements for you every year. You've got access to this information. You can find that out. For those of you that don't have accountants, which I'm hoping all of you do, you can look on your bank statement. I mean, you can go to your bank statement over the last, let's say, 12 months from the end of January. Just look back at your numbers. How much is your rent? How much your utilities? How much your telephone? How much your office supplies, your repairs and maintenance, your insurance, your labor, all of these things. The other thing that I think is really important, and for all of us, this is really important, is to know how much we want to make out of this business. What salary do you want to make every month? Because that'll influence the price you charge. I mean, if you decided that you're not going to make a profit, well, then you know what? The price you charge is irrelevant. But if you need money to live, like $1,000 a month, or $2,000, or $5,000, or $10,000, or whatever it is, obviously that's going to influence, firstly, the price you charge, and secondly, the quantities you need to sell to be able to justify this. So nobody can advise you about whether your prices are reasonable or fair until they know all this detail. What is your rent? What are your utility? All of these things. And you've got to know what these are. I'm always surprised that often business owners don't know, or they know more or less, or they haven't looked at it lately, or they need to speak to their accountants or whatever it is. So just be very, very careful of not having access to this information, because it doesn't matter whether you're running a catering business, or if you're an acrylic painter, or if you're a photographer, or you a marketing person, this is going to influence the amount you charge for your service. And more importantly, what I'm going to share with you later on is calculating your break even. So is this business of mine viable? If not, what do I need to do about it? And that is a really, really key thing. The advantage of financial statements is they give you information. Not always good information. I mean, some of it is not good. You might do a financial statement at the end of the year, and you realize that, you're not making as much profit as you wanted to. In that case, you've got to make sure that you go through it, and your break even is a really important thing. Your break even gives you some information about how much quantity you need to sell every month, of each product or service. So it's really, really important that you look at the numbers and don't avoid the numbers. Sometimes business owners trying to avoid the numbers, hoping by some divine intervention they'll go away. And I want to tell you this as somebody that works with business owners regularly, is that ignorance is not bliss. So I want you to understand that. Ignorance is, that's not what you want to be doing. You don't want to be ignorant in your business. You want to know what the numbers are. If there's a problem, you want to address it. I remember really sad story, actually. What happened was I knew this business owner that his father was running a Subway store, like one of these stores that sell subs. And he came to me and he said, I've got a really serious problem. And I said, what's the problem? He said, my father's got a heart problem and he's running his business. And he's been running it for 10 years and hasn't made a profit. And all his money's gone into it. And that's that situation. And I said to him, if I was him, I would close the business down. He said, but you know what, he's put all this money in, what should he do? And I said, well, if he doesn't close it down, he's probably going to die because he's got a heart problem. So that's what my advice was to him. And I want you to understand that that is the challenge sometimes, is that your business is not viable, but you want to know that rather than be running it for years, hoping for some divine intervention or government grant or whatever it is that you're hoping for. So the first thing is you need to know what your fixed costs are. The second thing you need to know are your input costs or your variables. And the easiest example that I can share with you is making cinnamon buns. And there's a couple of reasons I use this example. Firstly, I think cinnamon buns really sell well. That's the first thing. Secondly, they really smell good in a bakery. And thirdly, they're very, very easy to make. And if I was to start a bakery business or a catering business or any of those food-related businesses, one of the things I would always focus on is how easy is this thing to make? So I want you to think about this. You may not agree with me, but how easy is this thing to make? Because very, very often I will see business owners that try and create like unique, one of a kind or special things. And usually those are not the most profitable things. Actually, there's a really interesting thing. I'm currently in Portugal. And a really interesting thing is certain restaurants you go into, they just sell one thing. And it's usually chicken on the barbecue with fries and maybe salad. And that's all you can order. There's nothing else. I mean, you can have desserts and coffee and things like that, but those are, that's the one product they sell. And you might say, well, geez, that makes absolutely no sense. And I say the reverse. I say they perfected making that one thing better than anybody else, and they make profit. Obviously, it depends on the market and the industry and all those type of things, but there's a very good example. So if I was starting a bakery, which I won't, I would think about that in everything I do. If I'm going to be making birthday cakes, for example, I try and come up with a model that makes it very easy to make birthday cakes. If I was making any pastries for my store, I would try and identify pastries that sell really, really well and are easy to make, because often the ingredients may be really cheap. For example, the acrylic painter, the canvas and the paints are very, very cheap. The amount of time is the key. The amount of time that people, your employees or you are spending creating the product is really important. So you have to know every recipe. What are the input costs in the case of cinnamon buns, the flour, if you put a little bit of yeast in, if you put in sugar coating, all those things. I don't remember how to make them any longer, but all of those things are important. And then the second thing you want to focus on is all the variable costs to get the product to the store. Maybe you pay transport, maybe you pay packaging, okay? So all of those things are input costs. In accounting, we call them variable costs or variable expenses. So basically, the inputs of the recipe. You need to know every single recipe. If you're working, let's say you're a contractor, you need to know every single process. And if you can write down this process, it makes costing so much easier. And I want you to understand this, is that costing can be quite complicated. I've seen it, for example, in the construction industry, that you always assume that certain people know exactly, how much a job is costing them, and often they don't. I mean, that's why even in accounting, they have cost accountants, because they realize what an important topic it is. Then what you do, you add your product cost. To calculate your product cost, you take your fixed costs plus your variable costs, and you add a profit to that, and that'll come. You'll come up with your selling price. But here's the key, and I want you to understand this: the key to finding a fair price for your region, for your industry, for your main street, for your industry, is to know your competitors' prices, and that's really, really key. The second thing that influences how much profit margin you're going to add onto any product that you sell is if it's a luxury or a necessity. When I go into a store to buy a loaf of bread, I expect to pay, a certain price. If I go into the store to buy luxury cheeses and things like that, I expect to pay a premium. So depending what you're selling, it'll influence your price. Now, every now and then, business owners will ask me, they'll say to me, Andrew, what should the average gross profit be for an industry like mine? I really don't like that question, especially from existing business owners. And the reason I don't like this question is they should have worked this out a long time ago, either through their accountant or through some industry expertise or somebody that mentored them or something like that. Should have given this information. But the government of Canada publishes these statistics. So they publish stats on averages for similar businesses to yours. So you can go onto the Government of Canada website, you can type in what industry you're in, you can type in a couple of details, and then it'll print out a income statement for you. So you can see, on average, a business like mine makes a gross profit of let's see what it says here. A gross profit of, see, even the range here is ridiculous. 74%, between 27%, 2.7% and 7.4%, which the variation is very, very high, in my opinion. So that's the problem I've got with the government websites. But the point is, if you don't have any other information, this is one of your sources of information. Another one you can do is organizations. For example, the Retail Council and the Convenience Store Association will publish statistics annually on the profit margins for businesses like yours. And I mean, if you just did a little Google search, if you just went on this afternoon and did a bit of a Google search on what are the average profit margins for businesses like mine, how much rent should I pay, all those type of things, you'll find that out. I know when I was in retail, we used to have numbers, so you should only pay so much in rent, so much in labor, all those type of things. If anybody's ever been involved in the franchise industry, they've got specific benchmarks and ratios that they will use to determine whether a store is worth opening or not. So, for example, if the rent, once they get the rent, they'll be able to calculate what revenue they need to generate to justify that rent. If that number's too high, then they will not open the store. So that's the way they make the decision. And I want you to use that information going forward too, is that I want you to base your decisions on profit margins. So let's use an example. Let's say you're going to employ a new assistant. You need to calculate, based on your profit margin, how much revenue you need to generate to justify their salary, okay? And it's really good to know what these numbers are, okay? And again, it depends on your industry. It really depends on your industry, what they are. And I want you to understand that these are some of the things that make you a better business owner. A couple of other things that I think are really, really important that you do regularly is do competitor research. And I mean, you can use a little table like this, for example. We used to do this in retail all the time, is take your competitors list your competitors, list their prices, and then have a grid of exactly how much each person's charging. So let's use that example of a bakery because it's a simple example for me to use. Let's say, and I was going to open one in this little town that I'm in now. What I'd do is I'd go and find the top 10 or the top 5 bakeries in the area and go and see how much they are charging for similar products that I'm selling. And you should be doing this regularly, especially now, because you've got to understand most people have moved their prices up. So most people this January have moved their prices up, or maybe some of them even before then. So now is a good time to go and do competitor research to understand how much they are charging for similar prices. Now, the second one I'm going to discuss is a retail and e-commerce business. And this is really, really important. So I can't tell you how many times I've worked with business owners and let's say they've imported a product from Europe. When they looked at the price originally, it looked fair. When they calculated the shipping costs and all those other costs that go into it, it can be very, very expensive. And because e-commerce is growing so much, I think it's very, very important that you understand that when it comes to e-commerce, there are extra expenses. So there are extra expenses that the business owner will incur that they need to take into consideration. And I think it's really important that you understand this, that depending on your business, you need to make sure that you have all the information available to you. The first thing you want to do is you want to know exactly what the true cost of every product is. I'm going to show you an example of that, but you want to know the true cost. So basically the landed cost in your store, okay? If you've got an e-commerce business, the landed cost at your drop shipper, if you're doing drop shipping. Then what you will do is you'll calculate a fair profit margin. And what happens is, depending on the nature of the business, is you can have different profit margins for different products. So for example, maybe your fast selling products, the profit margins aren't so high, and the slow selling products, you'll have higher profit margins. So I'll give you an example. If you ever go into a supermarket, you will usually see that on the outline of the store, those are the biggest profit margins. So you'll see the bakery, the butchery, the deli, the fruit and veg. Those are the very profitable part of the business, okay? Then in the center of the store, usually you'll have, depending on the layout, usually you'll have the groceries. And the groceries are the drawer, and then these products on the outside of the store, on the circumference, I was trying to think of the word, are higher profit margins. So what they do is they use a combination of high margins and low margins to get a good average margin, and it's a weighted average. So I think that's really, really important. And when I was a retailer, this played a big, big part eventually in the success of my business, because I understood the simple concept of weighted profit margin instead of just across the board. There are certain industries that will use the same profit margin for all of their products, and some of you might be in that business, maybe in a clothing business or furniture business, whatever it is, and you always use the same formula. It doesn't matter what the item is, use the same formula. I'm not a fan of that, but if it works for you, just keep doing that. And remember that your profit margins will often be influenced by the competitiveness of your industry. If you're selling something that lots of people sell, well, it makes it really difficult. And the best example is if you go on to places like Amazon and things like that, you will see the massive, how competitive that industry is, which has an influence on the prices. And the other thing I was thinking about, which is really important, you'll often see massive variances. Yesterday, I was trying to buy like one of those suction things to hold my phone when I'm driving around, because sometimes I get lost. And I walked into the one store and it was $25, and I walked into the other store and it was $5. And it was very, very similar. And then you might say, well, how can the $25 business justify it? Well, it's probably not a fast-moving product in their store. So they certain products they'll make higher profit margins on, and certain products they'll make lower profit margins on. And once you understand the concept, it really helps you look at your store and see what's selling really well, and maybe increase margins on certain products and reduce profit margins on other products. But here's a very good example of how you come up with a true cost of a product if you're in retail. You take your product cost, you take your packaging, if you've got packaging incurred, you've got shipping, and you've got customs and duties. So you take every single expense into consideration. Okay, these are all your variable expenses. If you've got an e-commerce business, this is really, really important. You know, I can't tell you how many times I've spoken to business owners that have had reasonably profitable businesses and then gone on to e-commerce and realized that e-commerce is quite different. And I want you to understand that. Even if you've got a product that's very, very profitable, and I'll give you an example. Actually, my son, Daniel, my oldest son, he's been running a e-commerce store for probably about 7 years. And this is something that he's always struggled with, you know, making sure that he gets the right profit margin. Because in his business, like many e-commerce businesses, you've got the cost from the supplier, then you've got a shipping fee from the supplier to your distribution center, then you got packaging and label, and then if you use a fulfillment service, which a lot of businesses are using nowadays, so what they do is they ship their product to a fulfillment center or to Amazon. A lot of small business owners are now doing that, and then they distribute it for you. But they charge you, obviously, a picking and packing fee for that. And then you've got your platform fee. The most common platform in the world is Shopify. They'll have a platform fee, and then you'll have your total costs. So you've got to price your product on $28, not on $17, okay? It costs you $17, but the true cost with all your expenses is $28. And this is why it's very, very important that every single one of you go through the same exercise that I've gone through to know exactly what your true costs are. And I think that if you understand this, it can make you a better business owner, but you've got to be particular. I know that I've seen this many times in businesses that people make assumptions. I've seen it in construction business. I don't know if anybody knows, but one of the biggest failure rates of businesses are things like construction businesses. One of them are things like supermarkets, are things like gift businesses, those type of businesses. And the reason often is that even though profit margins on things like gifts are very, very high, or even the profit margins on food can be quite high, the fixed expenses are the biggest challenge. So you've got to understand that, is that sometimes, even though the product, coffee is a very good example, you know, a cup of coffee is not expensive, but you have to sell big volumes to be able to make a profit. So you've got to understand this. So you've almost got to weigh this thing up. You know, will I sell enough of these things? The way that stores like Starbucks and some of these coffee shops that have survived is because they upsell. So somebody comes to the counter, orders a cup of coffee with oat milk or whatever it is, and then they offer them something. Do they always buy? Absolutely not. But do they buy sometimes? Absolutely. And it's all those little add-ons, you know, the syrups and things like that. I never buy coffee from Starbucks, but if I've heard people speaking about what great, you know, drinks they have and how they make their drinks and all of that, and I don't understand what they enjoy about them, but it's interesting, their business model. Let me just share something with you. I think it is, let me just turn off my camera because I need to speak to this now. But let me share something with you. I think that is very, very important that often small businesses don't understand, is a lot of us have been taught how to mark things up. And I find it very interesting. Even when I speak to educated business owners, they'll say, you know, my markup is 100%, my markup is 150%. And they use that when they price, which is okay. I mean, I don't really mind. if you use that term when you're pricing products, but I don't like markup at all. I don't like thinking in markup. I don't like pricing my products using markup. I like to understand what gross profit do I make. If I sell computers, what gross profit margin do I make on that? If I sell bottles of water, what gross profit margins do I make? So this is the formula I like calculating, is what is the gross profit margin? So if I'm selling, let's say, I don't know, bottles of water that cost me 30 cents each at Costco, and I'm selling them for $1. Oh gosh, now I put the dollar in the wrong place. That's what I want to know, is what my profit margin is. If I sell them for $1.20, what is my profit margin? If I sell them for 99 cents, because somebody said to me, if you sell things for 99 cents, you'll sell more. Those are the type of things I'm looking for. So as a business owner, it's really, really important that I understand what profit margin is. It's not markup, it's profit margin. So let me give you an example to show you the difference, because I know I at university was taught markup. I wasn't taught profit margin. So let's say you mark something up 200%, your profit margin is 67%. If you mark up something 100%, your profit margin is 50%, okay? If you mark something up 500%, your profit margin is 83%. Your profit margin will never be more than 100%. It will always be less than 100%. The only time your profit margin can be 100% is if you don't pay for the inputs. So for example, if, I don't know, something falls off the back of a truck, you pick it up and you resell it, then your profit margin is 100%. Otherwise, it's always less than 100%. You need to know that as a business owner, because when you submit financial statements at the end of the year to Revenue Canada and your accountant produces an income statement, we always measure profitability on a portion of the revenue. So that's how you understand it. So usually I use this formula. So I was taught how to use markup and then realized that I don't like markup. And so I use this formula. Let's say a bottle of water costs me $1, okay? And I want to make a 30% profit margin, because that's what I make in my business. Then I know to sell the bottle of water for $1.43. Okay, so there's an example of how you do it. What about a service that have labor cost only? I'm going to answer that question for you. So I haven't got to that yet. Okay, so I'll get to that now. But let us just focus on this section first, because a lot of you on this webinar will be retailers, and I think it's really important that you know what your profit margin is. Another thing I recommend all of you do is you go to your accountant and you ask them what your profit margin was last year. And the way they calculate it is they take your revenue for last year minus your cost of sales divided by your revenue. Okay, so that's the way they calculate it. And depending on the nature of the business, if you're like a clothing business, your margins can be 70%, 80%. It can be quite high profit margins. Okay, so understand that as a business owner, is that you need to know in your business overall what your profit margin is, okay? And if you know it, you can then make comparisons. You can make comparisons to other businesses out there. So understand the importance of that. You, for example, can see if your profit margin's too low and then do things about it. I mean, people like me could easily help you with that. If you came to me and said to me, Andrew, is my profit margin high enough? I could do a bit of research, even though I don't know your business. I could do a bit of research and help you quite quickly to determine if your profit margin is reasonable. Now, every now and then, people will ask me, how do I value my time? Because it's really important. Even businesses like mine, I sell time. I don't have a product. I don't have a service. I sell time. People employ me to run webinars, to run seminars, to run workshops. And so everything I create is not a product. Actually, I know a bunch of people that sell products, friends of mine that are business owners, and they always say, I never understand your business model. I said, yeah, well, we don't have tangibles. I will create a seminar and I'll resell that seminar 7,000 different ways. Okay. So I don't have an input cost, but I need to charge for my time because my time is valuable. And I've realized very often, especially as a seminar speaker or somebody that presents, people don't value services. Sometimes I'll often get small business centers that will contact me and say, Andrew, can you run a seminar for a nominal fee? And I think to myself, really? After 25 years doing this, you want me to drive all the way to your small business center, do something for next to nothing? So they don't really value service. They just understand it. But how you calculate what is a fair rate for your time is you calculate your monthly billable hours. So what does that mean? Is how many hours do you do customer work? So customer facing work. That's really what you want to be doing. If you're a plumber, how many hours are you plumbing? If you're a caterer, how many hours are you catering? If you're an artist, how many hours are you artisting? You know what I'm saying? You want to calculate the time that it takes to run your business every month. Because once you do that, let's say, for example, I work out that I work 5 hours a day, customer-facing hours, times 5 days a week. It's 25 hours a week, times 4 is 100 billable hours a month. So I know that. Is 100 billable hours, that's what I calculate. I mean, sometimes it'll be 80 and sometimes it'll be 120, but on average, it's 100 billable hours. So that's the first thing. The next thing you need to know, which is really, really important, is what your fixed expenses are. I'm a service business, so my fixed expenses may not be as high as a retailer, but I've got expenses. I've got my rent, I've got my utilities, I've got my telephone bills, I've got the software that I use in my business. So the amount is not high compared to retail, but there's an amount there. So I need to know that. The second thing I need to charge for is my time. So do I want to earn $1,000 a month, $2,000 a month, $5,000 a month, $10,000 a month? And if you don't know what that number is, try and come up with a fair salary, even if you're not drawing a salary at the moment. What is a fair salary for somebody like me? So is it $2,000 a month? Is it 3? Is it 5? Is it 10? Whatever it is, because that'll help you calculate your hourly rate. Then once you got the billable hours, once you got your fixed expenses, you divide one by the other, and that'll give you a cost per hour. It's really, really simple. You find out what your competitors are charging, and then you come up with a fair market rate. Okay. So that's how I calculate my billable hours. So very, very often, I'll be honest with you, people think my rate is very, very high. What they don't realize is when you're running webinars, like I do, is I use my voice, and I can't work 8 hours a day. The most I can work, and usually that's even tough, is like 3 hours a day. So understand that this is key to building a successful business. You need to know your business better than anybody else. And if you know your business better than anybody else, you can calculate a fair rate for your time. All right, so now I'm going to work on some examples, and then I'm going to address as many questions as possible. And I just want to remind you that on Thursday, we're going to have a mastermind again, and I'm going to discuss some specifics relating to strategies you can use to price. Okay, so I'm going to do that on Thursday. So if any of you want to ask questions, and I'll speak about different strategies that business owners use. Okay, so I'll speak about that just to show you how it's done. Okay, I don't want to do that. All right, so let me just show you an example. Let me just show you an example. I want to see if I could increase the screen size here. There you go. So let me just show you an example. Let's say this is my business. Okay, so this is my business. I run a let's say a consulting business, if you want to call it that. So I run a consulting business, and this is my consulting business, okay? You can either do it on a monthly basis or an annual basis, depending on what you feel like. But let's say I run a consulting business, so every month I have more or less the same outcome, okay? Which is a really important thing. Like I said earlier on, you need to know your business. So let's say my accountant charges me $150 a month for my accounting. I spend $200 on advertising. I have bank charges of $45 a month. I want a salary of $4,000 a month, okay? I spend, let's say, $75 a month on utilities. My internet costs me $100. My travel expenses are $500 a month. My insurance is $124, okay? My rent is $750, okay? I'm using a co-working space. Stationery, about $4 a month. Telephone and cell phone, $120. And then I use some equipment to run my business. I use a laptop, I use a projector. I've got another, say my equipment is, I don't want to lie, but say $10,000. It's $10,000, and most of that equipment will last me, say, about 3 years. So $10,000 of equipment, 3 years. That's about, let's say, $3,300 a year. So that works out about $250, let's say $300 a month, okay? So that's my depreciation or amortization. Maybe that's a better word, actually. I'll put the amortization of my equipment. There you go. So it costs me $6,418 a month to run my business, okay? Remember what I said, I work 5 hours a day consulting as I get too tired. So that's 100 hours a month. So that means I need to charge at least $64 an hour for my time. So that's how you would work it out. Just like I've done now, you would work out your hourly rate by doing that. Okay, and it doesn't matter what your business is. It really doesn't matter what your business is. I think actually, if you're in a business that doesn't sell time, what I would do is I would include that. Actually, this is a really good question that Wayne mentioned here. I do catering and run a small food service called Uber Eats, Skip the Dishes, and DoorDash. The percentage they take is roughly 25 to 30%. What would you suggest to bring down their cost that'll boost my profits? Here's the thing that I think. It is very, very difficult, very, very difficult to sell food and pay Uber Eats and Skip the Dishes 25 to 30%. I think it's very, very difficult. The only thing you can do is come up with dishes that are reasonably priced. I'll give you a very good example. I'm traveling now, and there's a supermarket right next door to me, about 500 meters maybe from me. Anyway, so earlier on at lunchtime, I went there, and they have almost like the pasta's a little bit, I don't know if it's pre-cooked or it's like a little bit cooked. They put it in a frying pan, they add the mushrooms, they add a bit of oil, blah, 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 and a bit of chicken, and they make it in like 10 minutes. The profit margins on that plate is very, very high. How do I know? Well, the ingredients are reasonably priced, and the time that it makes, the woman made it in front of me. So the time that it makes, she made it was very, very quick. So if I had a catering business, and I don't, if I had a catering business and a food business, I would focus on making simple dishes really, really quickly. That's what I would do. And this example that I've just given you is an example of something that I would do. But let me warn you that if you are paying Skip the Dishes 30%, it is very, very difficult to make a profit. I'm telling you, it's very, very difficult. Because even if your margins are high, let's say your food cost is 30%, okay? So it's 30% your food cost. The problem is that Skip the Dishes takes 30% off the top. That's the problem. So if the product costs you $3, okay, a plate of food costs you $3, and you sell it for $10, okay, your margin is 70%. As soon as Skip the Dishes takes their 30% off the top, your margin comes down to half of that. Do you understand? Not half that, a little bit more, but anyway, but it comes right down. And that's the problem. I believe, and I could be wrong, that many, many small businesses, when they price their products, they do not take the margins into consideration, the discount from Dish. That's the first thing. And the second thing, if they were taught markups, in their minds, they assume that they're making profit out of their product and they're actually losing money. So those are just my thoughts. It's very, very difficult unless you are really smart and you make dishes that, so for example, I see it here in Europe, they have like a Skip the Dishes and Uber Eats recipe menu specifically for those, so you can only order those products. And I'm assuming these are smart people, and again, I'm making a big assumption, is that they've taken the Uber Eats discount into consideration. So that's a very complicated, difficult question and a big, big problem for small business, okay? So let me tell you, for the people that are in the service business, the way you do it, let's say your hourly rate is $100, okay? This will tell you how many hours you need to sell every single month to survive, okay? Let's say you're selling, I don't know, paintings. If you want to put their paintings, because paintings don't have a cost of sale, okay? Or you do, you have a small cost of sale. If you want to put paintings in and you're selling them each at $50, that's how many paintings or prints you need to sell. Or if you're selling photographs or prints or whatever it is, that's the way you calculate it. So this tells you how many of these you need to sell every month so that you can get your salary that you want. And I think this is a very, very powerful thing. I really believe that if I know, so in my business, I need to know how much revenue do I need to generate every month to survive, okay? To pay my mortgage, to pay, buy food for my kids, to pay for my car, whatever it is. I need to know what that number is, because that's the starting point. This also influences your decision. Let's say, for example, you're currently running a service business. So you're currently running a service business, and I don't know, your hourly rate is, I don't know, $45 an hour. So that means that you need to sell 143 hours a month to survive. Well, there's not 143 billable hours, depending on what business you're in, but there's no 143 billable hours. So what options do you have? Well, you can reduce your fixed expenses if you possible, okay? Or you can increase your price maybe. So increase your price. Look what happens when you increase your price. It reduces the amount of hours you need to sell, okay? So that's the way I make my decisions, okay? Kashif says, negotiate the prices with DoorDash. I've seen rates go down as much as 20%. The problem with that comment, Kashif, is sometimes small business owners are so small that negotiating with big companies like Uber Eats and things like that is often a waste of time. So I understand that logic says you should do that. The reality is often very difficult. Anyway, but you're right, you can probably negotiate with it. But let's focus on this here, is now you understand why this is so important. So let me give you another example. Let's say you're a retail business or even the food business. Actually, I'm going to use the food business as an example. Okay, so let's say I'm in the food business. I'm going to show you an example for a food business. If you're in the catering and things like that. So let me just say to you again, okay, is that, and I want you to understand this, it's really, really important that you understand this, is that you need to know what your profit margins are, okay? And if you're in the food business, this is general advice for all of you. If you're in the food business, you want to make sure that you make plates that take short amount of time, okay? Because labor is one of your biggest expenses, okay? And you want to make that labor productive. That's why, for example, we've seen, I don't go into McDonald's. The only time I ever go into McDonald's is when I'm traveling and I cannot find a good cup of coffee. So I think, you know what? McDonald's is not a good cup of coffee. but some of these cafes that they run in Europe and stuff are not too bad. Anyway, and I'll walk in there. And you'll see, for example, now you have to go to, they don't have cashiers. They have the computers that you have to keep adding. And what have they done? They've reduced their cost of their fixed costs by putting in machines instead of human beings. So I'm going to show you an example now, and then I'm going to try and answer some of your questions. So let's say, let's call this catering business. Okay, this is a catering business. We'll call this a catering business or a food business, catering and food business. Okay. Yeah, we'll call this catering and food business. That's what we'll do. We'll call it catering and food business. There you go. So let's call it that. The first thing I need to know is you could do it annually if you want to, and some of you, I encourage you to do it if your business is quite seasonal. So, but let's say we're going to do it monthly for this example. I'd go through, let's say my accounting fees are $150. Okay, my advertising is $400 a month, let's say. Let's say my bank charges are $54 a month. I've got no idea how much bank charges are. Let's say the owner wants to earn $4,000 a month. Let's say your hydro is $200 a month. Let's say your internet costs $220. Employee, let me just leave that one out in the meantime. Let's say, what happened there? Let's say your petty cash every month is $120. Your insurance is $453. Your rent is $2,345. Your stationery is $54 a month. Your telephone and cell phone is $120. Your salaries, let's say you have 2 employees and you're paying them, let's just see, you have 2 employees, you're paying them $30,000 a year, so $60,000. Employees are expensive. Sorry, that's $5,000 a month. Okay, your depreciation, again, you do the same thing I did earlier on. Usually phoning your accountant is the easiest thing, but let's say you've got $100,000 of equipment in your business, and you're going to amortize it over 5 years because that's how long you expect it to last. That's 5 years, 100,000 divided by 5 is 20,000 a year. So you'd put in your depreciation as, let's say, I don't know, $1,600 a month. There you go. So that's your costs, okay? So that's 14,616. And I want you to watch the numbers. So the first thing you need to know, what is your profit margin, okay? So in an average, I don't like using averages, but let's say food businesses, I like a margin of about 70%. Okay? That's the margin I like. So if your fixed expenses are $14,000, you need to generate $20,000 of revenue a month. Okay, so now you know you got to sell 20. And if your average customer comes into your store and spends, let's say, $22. Okay, when customers come into your store, they spend $22. That means that what's going to happen? Let me just change this. Yeah, no, that's the wrong way. So if your customer on average spends $22, you need 949 customers a month, okay? So that's what you need. Let's say, for example, you start selling Uber Eats. So Uber, remember, they take the cost off the top. Let's say you negotiate a deal, 20%. I want you just to watch the numbers, okay? So, and this will maybe scare you or make you understand. So if Uber Eats, if I start selling Uber Eats, my profit margin goes from 70 to 50. Obviously, not all of my stuff is sold on Uber Eats, but let's just use that as an example. So it goes from 70 to 50. Just watch the numbers. See what happens to the numbers? You need to sell almost 50% more product to make the same profit on Uber Eats. And this is why I want you to understand this, is that every business, every single business needs to know what the impact of all of these costs are. Wayne says, you had mentioned earlier to check your competitors' pricing. If your competitors' pricing is roughly less, but your expense are higher, would you suggest lower price to be competitive? No, I don't suggest lower price to be competitive. I suggest that you check your competitors' prices If you're charging more, well, good for you. You keep charging more, but you got to justify. You can't be charging $10 and all your competitors are charging $8 without justifying. How do you justify it? You do really good marketing. The image of your store is good. All of those things. But the most important thing I want you to understand is that things like Uber Eats, all of these things have a big impact on your profitability, okay? And you've got to understand this, that if you're going to sell product on Uber Eats or whatever, DoorDash or whatever it is, because I mean, in this example, I use DoorDash at 20%. Somebody mentioned you can negotiate with DoorDash 20%. So that's what I did. If it's Uber Eats, well, then it's even worse. So what about, how do you, let's say you decide, I want to see if it's worth me doing Uber Eats. So this is the way you would do it, is you would separate your business. What do I mean? What I mean is that you will make sure that you calculate. So you'll make sure that you calculate what portion of your sales would be Uber Eats. Okay, so let's use this example. Let's say you say to me, Andrew, no, I believe, based on research I've done, that a third of my expenses, of my sales would go to Uber Eats. Okay, so let's use that example. So basically, if a third of your sales was Uber Eats, you'd say, okay, the total fixed expenses was about $14,000. So let's say $5,000 you allocate. So you're allocating a portion of your fixed expenses towards your Uber Eats division. So this is how companies are doing it. So they'll separate Uber Eats from their main kitchen. Okay, well, that's what I would do it. So you separate Uber Eats from your main kitchen and you make it a unit. So in this case, it spends $5,000 a month for expenses. And let's say the profit margins on Uber Eats are 50%, then I'd know exactly how many meals I need to sell every month to justify Uber Eats. So that's the way I would do it, okay? But again, I understand that some of you on this webinar are maybe not mathematical like I am and are not experienced business owners like I am. But here's my advice to you, is get somebody to help you. Maybe sit down with your accountant, maybe sit down with another business owner, but you can't just leave numbers and say, well, I hope we're doing okay. And let me be honest with you, the person in the catering business, this is usually how catering businesses start. It'll be somebody, a family business. They learn how to cook and they become really, really good at it. And what happens is that because they're really good at it, they decide, you know what, I would like to start a food business. So then they start a food business, and in the beginning, it's fun. It really is. It's fun because they're doing what they love and things like that. And eventually, what happens is that it works when they don't have to take a salary. As soon as they have to take a salary, then the business doesn't make sense. Okay, so that's what happens often with retail business. There's a bunch of questions here that I'll answer. That's what often happens with catering businesses, is while you're keeping it really small, a family business, it's okay. As soon as you start scaling, that's where the cracks start appearing, because you're making much more food, but if you're not pricing this stuff properly, it could be a nightmare. Uber Eats is the same thing. You know, the volumes, Uber Eats is a volume business. So you've got to do big volumes to make the same profit, okay? So you've got to calculate that. So sit down with your accountant and let them calculate what revenue you need to generate to make the same profit. And remember, this is very, very important that you understand this. Your objective is to make the profit margin that you're comfortable with. And if 70% is the margin, that's what you focus on. So let me explain to you what gross profit percentage or gross margin is. You take the selling price minus the cost price divided by the selling price. If you want to work it out for your overall business, you take the sales or the revenue minus the cost of sales divided by the sales, and that'll give you a percentage, which we call gross margin or gross profit percentage, okay? Remember earlier on, I was saying to you, I do not like markup, but if you insist on calculating the markup on your prices, you take the selling price minus the cost price divided by the selling price, and that'll give you the markup percentage. To calculate your break-even sales, you take your fixed expenses and you divide by your gross profit percentage, okay? So if your fixed expenses were $5,000 and your gross profit percentage is 50%, take 5,000, divide by 50%, it'll give you $10,000. But always when you calculate your break-even, include a salary for yourself, just so you know, or maybe do a few different break-evens. If I take a salary, this is how much I need to sell. If I don't take a salary, this is how much I need to sell. If I employ 2 people, this is how much I need to sell, okay? Because that also happens in businesses. While it's the one-person business, it's doing well. As soon as they bring in an employee, then the business wobbles a little bit. Why? Because it takes a bit of time for the business to grow to justify that person's salary, okay? So it's quite an investment in the beginning, so keep that in mind. But you need to know what that number is. If you're in the service business, you take your fixed expenses, divided by your hourly rate, that'll give you a break even. So let me just summarize, and then there was a couple of really long questions there that I'm going to try and answer. Okay, so you've got to know your monthly fixed expenses. I and most other people cannot tell you if your prices are fair if you don't know what your monthly fixed expenses are. That's the first thing. Secondly, you have to know what your competitors' selling prices are. If you're going to charge more than your competitors, you've got to justify it. Maybe the range of price. I mean, just think of it. Garbage removal. You got 1-800-GOT-JUNK. They're not the cheapest in the market, but they're the biggest in the market, okay? Think of flooring that you buy or windows that you buy. All these companies out there that are selling it. Usually the most successful companies out there are usually the most expensive, okay? So understand, I'm not saying it's a reason for being the most expensive, but they've survived while other people that have come into the market, charged less, have gone out of business, because the reality is that starting off at a low price may get you customers, it won't keep you in business. Know your gross profit margin overall for your business and for each product that you sell. Or departments, for example, you may categorize your business: Uber Eats, catering, and I don't know, truck, whatever you want to do. You want to break them up into different profit margins. Price your products and services fairly, okay? You don't want to be the cheapest in the market. That's not your goal. That's not my goal anyway, to be the cheapest in the market, because I realize that it's a very, very difficult game. Imagine if every business competed against Walmart. It would be very difficult, and they'd make very little profit and things like that. And then increase your prices when required, which I think is really, really important that you as a business owner understand this, is that if your prices need to go up, they need to go up, and your customers will understand. And if they don't understand, you've got a problem. All right, so if the quality of the product quality is similar to your competitors' costs or less, this suggests that you might be, okay, I understand. Christopher answered this, that you might be able to reduce your costs as well, produce the same quality. If your product quality is higher and your costs are higher, this would support having a high price. I agree with you there, Christopher. Let's see this. My wife, she owned a homemade pie business, and all the pies were made from scratch, and she sold them all through Nova Scotia, and she did great, but prices just became too much. And she became known as far as England, just to mention a few. Her recipes were wanted worldwide. It was great at the time. She was known as the pie lady. So I hear you on these breakdowns, which are very true. Okay, that's wonderful. Thank you for the confirmation. Kashif says, I'm not sure what that means. But anyway, if you can explain, I will. You mentioned earlier that check competitors' pricing. If your competitors are pricing roughly less, but your expenses are higher, would you suggest to lower your prices? I never recommend people lower their prices. And the reason is because it's really difficult to sell things at a lower price. Again, unless you can justify the volume. So like the Walmarts in the business, or the, what's the other business that I can think of? The Dollarama's of the business. They sell massive volume. But even Dollarama, which is actually a very, very good example, their profit margins are 37%. So people assume that their profit margins are low, but actually very, very high for that type of business. I mean, they even compete with businesses like Walmart and things like that, because the profit margins are very, very high. Stores like Walmart work on very, very low profit. High volumes, low profit margins. When But if anybody's ever sold to Walmart, they almost dictate to their clients, to their suppliers, how much they're going to charge, how much they need to charge. So I've heard this story many times over the years. You'll go to Walmart and you'll say to them, I've got a product I want to sell in your store. They say, no problem, but you have to send us 50 containers and this is the price you're going to charge. So I'm not sure if you want to be selling to companies like that, but you understand the size, the massive volumes and the massive size are the reason they can do that. All right, anybody else? Do you have any questions? Just remember on Thursday, I'm running a Q&A session or a mastermind session, and you can join that. And if you've got any questions, because there I'm going to speak about different ways of pricing things. So I'm not going to focus on numbers and the break even like I did today, but I'm going to focus on different ways you can do it, different strategies that we use in retailing. And we'll discuss that on Thursday. So sign up for that event. And then also remember, next week, we've got 2 more webinars every week, like Chris said, till the 23rd of March. And all of these webinars are recorded. I saw somebody asked a question earlier. All of these webinars are recorded and they are loaded onto the My Main Street website. So you can go there. You can just type in My Main Street webinars and it comes up, and then you've got all that. Can we have the Excel sheets? Sure, if you send me an email, I will send you the Excel sheets. Okay, here's my email address. If you send me an email to this, I will send you these Excel sheets, okay? Actually, I can send it through to Chris too. So I've sent you my email address, and then I'll send you these Excel sheets. All right, here's a connect thing to the recordings. Just go to the My Main Street. Okay, so is there such a thing as food pricing grid in Excel? I'm not sure, Winifred, what a food pricing grid in Excel is. Usually I would create it from scratch. I don't know any fancy formulas, but I'm not sure exactly what you mean by a food pricing grid. I don't know what that is, so I can't answer that for you. But usually when in my business, usually I have created just really simple. Again, I'm a really simple person, so I use very, very simple Excel sheets with no fancy formulas or anything like that is what I use, okay? Let me just answer this one question. Not a grid, but a formulated spreadsheet. I don't know if there are any, but I would search for one online. I would definitely go to, I would probably go to Google and type in Google Sheets and try and see if you can find a formulated spreadsheet. Okay, I mean, I have a bunch of them that I've created, but not specific. I'm not sure what business you're in, Winifred, so I can't say I have one for you, but I'd probably look online. I'm sure there's a couple of examples. You know, put in your business and look for a pricing spreadsheet. If that's, oh, there you go, baking. Okay, if you're in the baking business, I'm convinced online there's a one that you can use. Then you can just put in your, I would look in Google Sheets, and I would also look in Microsoft has them, and I'm sure you'll find them. I know I created one for my bakery when I was in the bakery, so it can't be difficult. Just put all your products down, put down all your recipes, and then it'll automatically populate it. Because just think of it, total ingredients, divide by the number you produce, and it'll come out of the true cost. So it's not a difficult thing to do, okay? So that's the way I would do, but I'm sure you'll find something online. I've got a feeling. All right, my time's up. Thank you very much, everybody. I will see you on Thursday, same time, same place. Sign up for that webinar, and I'll share some more advice with you. Thank you very much, everyone, and have a great afternoon.